All right, we're live. So welcome back to Dapp University. So Bitcoin has just broken $60,000, right, and is approaching a new all-time high. We're going to talk about that, why that's such a big deal, what you need to watch out for. Okay, we're going to look at a lot of other news updates that have happened in this space, particularly around the technology that is behind blockchain. It's primarily what we try to focus on this channel, but the cryptocurrency price action is also pretty exciting and also pretty engaging. We're going to answer some of your questions and a lot more. So if you're new around here, hey, I'm Gregory, and on this channel, I turn you into a blockchain master. So if that's something that you're interested in, then smash that like button down below for the YouTube algorithm and subscribe to this channel. And if you want to learn how to master blockchain step-by-step start to finish, then head on over to dappuniversity.com/bootcamp to get started today. All right, so let's go ahead and get started here. Well, actually, we got some people jumping in the chat. Code Chap, Culture Hive, David Stone, Code Chap, Egghead, DS, Gemma, hope I'm saying that right, THX like this, Wendy, Heath, welcome. All right, so let's go ahead and jump into this. So the first thing that is probably on everybody's minds, are like checking their phone this morning, is what's going on with crypto prices, because a lot of stuff is up relative to the entire year, relative to all-time highs. And Bitcoin in particular has been leading the show for the past month or so, and is now broken above $60,000, which is a pretty critical price for Bitcoin because it only has price history above $60,000 for a few days of its entire life, okay? So if you zoom out here, Bitcoin broke 60K for the first time, I believe, in March of this year. Okay, let's see here. Not in February. Yeah, it was in March. And then we've got, one day in March above $60,000, 1, 2, 3, maybe 4, 5 days in April. Maybe, I think Bitcoin's been above 60K less than a week its entire life. I don't have the stats here perfectly right in front of me. The whole point is, we're approaching a new all-time high. I think there's lots of reasons why people are hungry for gains to send Bitcoin well past this, up to the hallowed $100,000 per Bitcoin that people have been talking about for forever, basically. So, what is probably the biggest factor behind this, in my opinion? Okay, as always, whenever cryptocurrency markets are changing, there's always multiple factors, but I do think a pretty clear factor in this case is what's going on with the Bitcoin ETF. Okay, we got some pretty bullish news yesterday. It's not totally confirmed. That looks like there's not going to be any resistance to the ETF approval in the United States for Bitcoin futures ETF from the SEC, and that we can see this as early as next week. Okay, so I'll just pull this up. I've seen this screenshot circulating. This is still not 100% confirmed. At the end of the day, I wouldn't hang my hat on this completely until we get some sort of really official announcement where we can produce official documentation on this. But this looks like a screenshot from like a Bloomberg terminal, like email notification. Maybe it's a mobile app. I don't exactly subscribe to Bloomberg terminal, so I don't know what the user experience is like. But this is what I've been seeing circulating around, right? The Bitcoin futures ETF said not to face SEC opposition and deadline. Okay. And then we've also been seeing more details like this, more kind of insights from Bloomberg. So basically, Bloomberg's data team is in the process of adding the ProShares Bitcoin Strategy ETF to the terminal. The ticker will be BITO. So 95 BPS, less than half of Grayscale Bitcoin Trust GBTC's 2% fee. So this thing is going live next week, either Monday or Tuesday. So again, some of this stuff's just screenshots, not 100% confirmed. But a lot of people who are influential in the price of Bitcoin are going to have access to this data if it actually is like inside of a Bloomberg terminal or something like this. And it's probably responsible for a lot of the price action that we're seeing. Okay, not to mention people who might have the inside track of what's going on with the ETF approvals, all that type of stuff. I think it's a huge factor. And so I'm seeing some debates about this, like whether the Bitcoin ETF approval is a big deal or not. Do we really care about a futures ETF, or do we just want a spot ETF? Some people say, hey, it's overhyped, all this type of stuff. I have a couple of perspectives on this. One thing is, I think there's something to the camp of people who are saying that like a Bitcoin ETF isn't as consequential for bringing new people into the space, because we have so many ways to buy Bitcoin now compared to when we did 3 years ago or something like that, right? But my counter to that is giving Bitcoin way more legitimacy in the eyes of normal people, and also giving some sort of regulatory nod at regulatory clarity around Bitcoin, and just confidence for people to participate in actually owning Bitcoin from the eyes of people who could regulate it, right? Inside the United States in particular, okay? So that's actually incredibly important for crypto and Bitcoin and overall adoption, because I think people in crypto take for granted how skeptical still so many people outside of crypto are about Bitcoin at all. Like there's still huge numbers of people who just won't touch it with a 10-foot pole. And as time goes on, and you have more and more social proof about more people who do it, the status that Bitcoin achieves in the eyes of regulators inside the U.S., the fact that it's included in traditional financial products, all this type of stuff. The farther down the road you go with something like that, the more people you can capture and into this new way of doing things. Okay, so that's sort of my counter argument to saying that the ETF approval is not that big a deal. Maybe not this one instance in isolation, but it's the starting line for another concentric circle around the rings that we're drawing to draw more people in. Okay, so that's what I'd say about that. And what would I say about actually, Bitcoin breaking a new all-time high as a result of what's happening right here and what's coming down the pike? Well, I would say that the all-time high is really probably just a starting line for a next leg upward in the crypto markets. That's kind of how things tend to work. Okay, and again, this is just my opinion. It's not financial advice. It's not necessarily based on fancy technical analysis. I mean, we're seeing just rampant adoption of this technology from a fundamentals perspective. I mean, we've got Visa, MasterCard, PayPal, Stripe, everybody's piling in, all right? And then from an investor side, people are hungry for gains. So if those fundamentals are all on board, there is a little bit of technical analysis in the sense that we're reaching an important all-time high. And typically what happens when you break past those all-time highs is stuff just starts to kind of go crazy. That's typically how things have happened in the past. And if history is any indication of what will happen in the future, it doesn't always perfectly indicate that, but it's just kind of human nature. Most sort of inexperienced, retail investors and things like that, they start buying at all-time highs. People start paying attention. Like it's because that's what it takes to get their attention, and then they sort of FOMO in, and I think that's likely going to happen again. So I think that's going to have a trickle-down effect to pretty much the entire crypto markets. We could just get a graph of the entire crypto market cap and watch it probably start to lift off as Bitcoin starts to break a new all-time high. Now, that being said, we may not break an all-time high like right now. Okay, we could be at the 60K level. We could get some sort of rejection. We could test all-time high, and it might take testing all-time high a few times before it actually breaks. Okay, but we're really close. And if I were to bet, I would say it was probably sooner rather than later. All right. I think there's something to be said for Q4 being really good for all of crypto. So we'll have to wait and see. Again, it's just my opinion. It's not financial advice. I'm not telling you to buy or sell any cryptocurrency based on this information. But it feels like people are hungry for gains and markets ready for the next leg up. So let's just see here. What do y'all think down in the comment section below in the chat? So let's see here. Yeah, everybody's pretty excited. Hey, I'm excited too. It's been choppy for the last while here. So speaking of the fundamentals, particularly what's happening in the ETH space, because again, ETH is doing pretty well. Bitcoin right now is kind of the rising tide that's bringing up all ships. It's leading the market. It's sucking some air out of some other coins for sure, but I think we're gonna have a lagging indicator, right? If breaking all-time highs is kind of a lagging indicator for more sort of FOMO into the space, I think we're gonna see that trickle down a lot of the cryptos. But right now, ETH is doing pretty well. We actually we're trying to get close to $3,900. And I think it's probably just a matter of time before ETH does its thing and starts to print a new all-time high as well. Okay. For the fundamentals perspective, from people wanting to get into the space, I mean, if you just zoom out, you look at the 1-year trend or just like the max, right? Let's look at the 1-year trend. We're still in a clear clear trend line upward that's curving upward. Okay. And there's nothing to think that there's nothing from a fundamentals perspective to think that this trend is breaking when you look at the adoption of, active users and what's happening on Ethereum network. And there's nothing in the technicals that would make you think that this trend was broken. Now, right here, there's a lot of doubt that made you think that this trend was broken, but here, not so much. So speaking of fundamentals for ETH, let's look at something that I saw recently. One second, let me just pull the tweet from my screen here. So this is from my buddy Anthony Sassano over at ETH Hub and the Daily Gwei. So he put this timeline that I thought was pretty cool. So talking about the timeline for the merge for ETH 2.0. Okay, so I'm not sure where this graphic came from, but he posted it. I don't know if he made it or not. But I'll just put a link to the tweet so for full credit, y'all can see it. It's in the live chat replay. So anyways, path to the merge. So what is this? This is going to give you kind of a timeline and seeing what happens for Ethereum to transition over to ETH 2.0 phase 1, which is basically where Ethereum 1.0 merges, like the ETH 2.0 that we have being built right now merges into ETH 1.0, where we now have proof of stake turned on for ETH. So just a quick recap on what that is and how it works. Basically, you might have heard of the long-anticipated Ethereum 2.0, which is going to be the new and improved version of Ethereum that people have been waiting for years, all right? Because a lot of people's experience with Ethereum is slow, it's expensive. But if you're new, just know that pretty much everything that you do with blockchain, with smart contracts, started on Ethereum. That's where a vast majority of the innovation happened. Trust me, I know. I was here. I watched it all happen. I built some of the stuff. Okay, so basically, whenever people use that, they experience the pain of this and say, "Oh, I wish this was more scalable. I wish this was cheaper." All this type of stuff. I wish that I could stake my ETH natively, all that type of stuff, and get a passive income reward with it. So that's what Ethereum 2.0 is all about. Okay, so it is a separate blockchain being built. And so it's set up right now. You can't really use it. You can stake your ETH on it if you send it over there and lock it up. But now this blockchain is going to get merged back into ETH 1.0 relatively soon on the grand scheme of things. We'll look at the timeline here in a minute. And that's when proof of stake can get turned on. You can stake your ETH natively on the network. You can withdraw it. You can run a validator, all that type of stuff. ETH will be faster as layer 2s get better and gain more adoption on top of ETH 2.0 because we have layer 2 scaling solutions right now. They're starting to gain adoption, but that will be the predominant scaling paradigm for Ethereum long-term, even with ETH 2.0, just because ETH 2.0 in and of itself is not necessarily going to make Ethereum reach the scalability and the affordableness that it needs to really gain mass adoption. So let's look at the path to the merge. And also, another quick caveat, I know I keep kind of, explaining this and giving lots of details, but the merge also is not the final version of Ethereum 2.0 either. We still have sharding beyond that, but still, shipping the merge is a massive milestone for ETH. So let's just take a look at this, all right? So October 14th, 2020, that was roughly 1 year ago today. Actually, it was almost exactly a year ago today. Yesterday was October 14th. So this is when the deposit contract was deployed. This is basically where you can send your ETH to stake it. December 1st, 2020 was when the beacon chain launches. We had Berlin, all right, London. This is when EIP 1559 went live in August. We can check on that here in a minute. We had a lot of ETH burned. October 27th, Altera activates. And then 2022 is when we're looking at the merge replacing proof of work. Okay, so a lot of people ask me, is the merge coming in 2021? I've always been saying that I don't think so, that'd be a very optimistic expectation. And I think this timeline, again, I don't know all the sources here. I don't exactly know who made the graph, but I think it's in line with what I've been thinking, which is probably going to come in 2022. And it looks like it's like based on this timeline, it's kind of like intentionally ambiguous whether it's in Q1 or Q2. It's like kind of right on the line. Maybe that means it's at the end of Q1 or the beginning of Q2. But Anyways, that's kind of like what we're expecting here, and you can see the path and the merge of the other environments here. Okay, so I put a link to that in the live chat replay if you want to watch it. So these things are hard to really calculate that far in advance. I mean, if you're watching this channel and you are an experienced software engineer, or maybe you've been building your own tutorial projects even, and you don't have professional experience, you might even you might even recognize this, which is technical things. They're notoriously hard to estimate how long they'll take. And you don't have to just be a developer to, do that. I mean, if you've done anything complicated, right? If you've, if you've started your own business, if you've worked for a business, if you've, remodeled a house, like whatever it is, you have ever moved, right? I think one of the best examples, I think most people can, I think this is one of the best examples that most people can identify with, because almost everybody's experienced this. Almost everybody. Think about moving, all right? You have to move, whether you live in a house, an apartment, a tent, whatever it is, right? Like, think about all the things that you have, and you have to go move into a new place that you've never seen before in a different country, and you have to pack up all your stuff and ship it and then put it into that place, and you don't know how big it is, and you have to fit everything just how you want it and resume life, without any breaks, right? You have to estimate how long that takes. That's incredibly hard to do, because almost everybody underestimates how long it's going to take them to actually move. I think a lot of people are like, oh, I gotta, my lease is up in my apartment, I gotta move. I'll just do it in like a weekend. And then 2 months later, they're still setting up stuff and their kitchen boxes aren't unpacked and they're, sitting on their counter and stuff like that. It's the same kind of thing with software development. And it's particularly multiply this problem by 1,000 when you're talking about building a public blockchain that secures billions of dollars of money, that whenever you turn it on, it's just on and it's got to work. So that's kind of what it's like to try to estimate the end of, the merge and when it's going to actually happen for ETH 2.0. We can get estimates. We kind of be patient, and then you have to multiply this problem even more with the way that Ethereum is actually developed, because it's a very decentralized way of doing things. All right, it's not like just a company that's building Ethereum 2.0. It's way more decentralized than that. Okay, so that's what I would say. Let me know what you think in the comment section below. Somebody says, I'm a realtor if you want to move to the USA. So it sounds like you think this run is different from 2017, and that we now have much more adoption, thus theoretically we'll be seeing much more bullishness. So there's two perspectives on this, okay? We do have significantly more adoption than 2017. 2017, the fundamentals of the space were, price was a little detached from the fundamentals, I'll put it that way. So you could draw one of two conclusions. The amount of fundamentals that we had in the space, obviously caused a bubble because we saw a ton of potential, right? The space was mostly potential, right? We had a lot of white papers, we had a lot of ICOs with that grand promises of what they're going to build. And then we saw, crypto prices go absolutely parabolic just based on this. Now, you could draw one conclusion that says like, well, that's not going to happen again because we have all these fundamentals, okay? And people aren't going to make that same mistake twice, and that these fundamentals are going to help, support a fair market value for cryptos, and that fair market value will continue to work itself out over time as these things gain network effects. I always talk about this channel, like as, you build technology that creates demand for the technology itself and people start using it. And as far as cryptocurrency is actually integrated into that technology, that the value can accrue to the cryptocurrencies themselves. That's the fundamentals that I'm talking about. And you see all this stuff happening, Visa, PayPal, MasterCard, et cetera, those fundamentals will grow over time, and then the sort of the fair market value for cryptocurrencies will track that, just sort of in a kind of up-only mode over time, a super cycle perhaps. That's one way of looking at it, okay? The other way of looking at it is, no, the fundamentals are here, and human nature doesn't change, and therefore the ceiling on where the cryptocurrency prices could go is just insanely higher than it was in 2017, and that we'll see another massive bubble with a blow off top like 2017, and that bubble, the ceiling for that's way higher because of everything that we have in the space. There's more reason for it to attract more people. There's more reason to attract more capital, and the ceiling's, just higher for where the prices could go. That's the other way of looking at things. I don't really know, to tell you the truth. I don't pretend to know. This is a situation where I just sit back and watch what happens, and try to adjust my plan accordingly. It's hard to know for sure. Let me just see here. I don't know what live stream I did where I fumbled on my calculator, but apparently this person is back to remind me of it and has said that the fact that I've fumbled on a calculator is the reason that no one can listen to me for anything. I love the nitpicking. It makes me think of this meme right here. It's just one of my favorite memes. Like this big dude on the couch, drinking a beer with his dog, and he's looking at the Miss Universe contest, and he's like, her nose is too big. But as boomer money comes in via the ETF, they won't buy actual crypto. I think that's true for some people. But there's also ways that people could potentially buy crypto in a tax-advantaged way if it's in the form of ETF, okay? There's still ways to kind of do that with crypto now, but it's just more ways, and so I think it's good. Somebody says it's proof it's live to all those who... I don't know why people think these videos aren't live. Why would I spend extra time just recording this not live and then posting it live? I'd rather just do it live. Somebody says he thought I was in my car for a second. No, I'm in my cave. That's where I am. Okay, so let's look at, we talked about sort of ETH merging and the ETH that's being burned right now. Let's actually look at that. Get an update on what's happening with ETH burn. So we saw on the roadmap that EIP 1559 went live in August because of the London hard fork. And so now ETH is getting burned whenever new transactions are created. So this does not necessarily mean that ETH is deflationary by default, like right now that ETH is overall deflationary, but it has periods of deflationary activity at peak. It has periods of being deflationary with peak activity. So we're looking at, here's a deflationary block, here's a deflationary block, here's one, here's one, here's one. So anytime ETH burns more than 2 ETH per block, that's when it's deflationary. So you see this block was not deflationary, but every other block on this page was deflationary, okay? So basically whenever proof of stake goes live, that's when ETH permanently becomes deflationary, assuming that it has the same level of network activity that we have now. And truly, I expect the network activity to continue increasing, which probably means it's going to be even more deflationary than the calculations you see here. Now, you could offset that a little bit by saying, hey, we're going to have layer 2 adoption, so that'll decrease the amount of activity on layer 1 Ethereum, but we still have to settle that back on the main chain anyway. So you have to kind of balance it out. But the whole point is, whenever a merge goes live, I do expect ETH to be deflationary by nature, which means less and less ETH is going to exist every single year. That's what deflationary is, as opposed to inflationary, which is right now more and more ETH exists every year, just like Bitcoin, just like lots of other cryptocurrencies as well. But here we can see that 542,000, almost 543,000 ETH has been burned. So if we look at the current cryptocurrency prices, let's just see if I do this with a better calculator so that I can not fumble it. I think one of the reasons I fumbled it last time was because I can't see the commas on a calculator, and when you're like trying to multiply a big number, you have to like count. It's kind of hard to read. You see a bunch of zeros in a row. It's like I can't tell how many zeros that is. So what's the current ETH price? Current ETH price is 3,822. So 3,822 times 542,908. Well, the Google calculator's not any better, so let's see here. 1, 2, 3, 4, 5, 6, 7, 8, 9. Over $2 billion worth of ETH has been burned since EIP 1559 went live. So that's huge. So somebody's asking, is there 117 million ETH total now? Let's just see here. I don't have the number off the top of my head, but we can look on CoinGecko. Yeah, almost 118. 117,937,714. Will the gas fees go down after ETH 2.0? No, they will not. So that's what layer 2 scaling solutions are for. So that's exactly what I was trying to explain earlier, and that's critical to understand. So basically, if you look at a site like L2Beat, this is basically how you can use a layer 2 scaling solution for Ethereum. This is where you build a second environment where you do the transactions there, and those transactions are actually settled back on the main Ethereum chain. So really popular ones are optimistic rollups like Arbitrum Optimism. We got zero knowledge rollups being developed. Will be ready relatively soon in the grand scheme of things with like ZK Sync, for example. This is how Ethereum gets cheaper. This is how the gas fees go down. I'll put it that way. Maybe that helps this concept click. The gas fees go down with layer 2s. They don't go down with ETH 2.0. And that means gas fees go down now, not gas fees go down later. And that means we'll have layer 2s even when Ethereum 2.0 ships. Somebody says, can I explain like I'm 5 the whole burn thing? Yeah, so basically how ETH burning works is whenever you send transactions right now on Ethereum, let's just use a simple example. Let's say I get up my MetaMask wallet, you text me your wallet address and say, hey, send me 1 Ether. Okay, so I send you 1 Ether. That's an example of a transaction on the Ethereum network. It's a simple transaction. Or let's say that I went and I wanted to take that 1 Ether and swap it for USDC on Uniswap. That's also a transaction. I'm interacting with a smart contract. I give it Ether. It gives me back USDC. Okay, so anytime you perform a transaction on the Ethereum network prior to EIP 1559, so let's say you performed this transaction on January 1st of 2021, earlier this year, how it works is, ETH is a proof of work blockchain right now before ETH 2.0, which means it has miners. And so whenever I send you that transaction, it gets mined and gets included into the blockchain. And whenever that happens, new ETH is created by the blockchain itself, okay? So I pay a transaction fee, and then also new ETH is created, and the combination of those two things go to the miner who helped include that transaction in the blockchain. Now, post EIP 1559, what happens is, part of the money that goes to the miner, part of the ETH, my fee, that fee is now split up into 2 parts. So the base fee and the miner tip. And the base fee gets burnt. It just gets completely erased from the network, okay? And so that's how burning happens when you ever send a transaction to a wallet. Now, when you have a lot of people doing transactions, that means a lot of ETH is getting burned. And when you have as many transactions included into a block as possible with high fees, okay, based on network demand, that can actually offset the amount of Ether that's created by the blockchain, which is 2 Ether per block right now. That's going to miners. And when more ETH is burnt, then more ETH is issued from the blockchain. That's when ETH is deflationary. And the reason it's going to go fully deflationary whenever ETH goes to ETH 2.0, and you simulate the merge, is because the block subsidy is going to go down to 0.5% per year. Okay, so it's called the triple halving. So ETH issuance prior to EIP 1559 was about 2% inflation a year, and that's going to get cut, or about 4%, sorry. That's going to get cut in half 3 times. So 4 to 2, 2 to 1, 1 to 0.5%. And if the network activity stays the same, then that makes ETH net negative 2% inflation a year and negative 2% deflation. So I hope that helps with the explain it like I'm 5. So then what is the purpose of ETH 2.0? To give us proof of stake, which is just a better consensus mechanism for Ethereum. Okay, now you get the benefit of being able to stake your ETH to earn passive income, run a validator, all that type of stuff. It will that will probably put less sell pressure on ETH, in my opinion, because one of the reasons that we have trouble with the ETH price right now, there's lots of reasons, but one of them is, I mean, miners are just going to quickly dump the ETH. You know, stakers are people who have decided to hold ETH, right? And they're going to lock it up. So that's one factor. Another factor, why do we have ETH 2.0? Well, sharding, whenever sharding happens, we will get a scalability benefit out of that. All right, we'll actually increase the amount of scalability that we'll have with Ethereum, but we're going to get an initial boost, a significant initial boost with layer 2 scaling solutions. And you multiply, the sharding is going to be a multiplier for the benefit that we're getting with layer 2 scaling. So basically, let's say that sharding gives you a 2x scaling multiple on the base layer. Well, take whatever you've got on layer 2s and then just multiply it by 2. So if you like double something that's already pretty good, you're just like, boom, you're increasing it that much more. But doubling what we have now would not help us achieve mass adoption level scaling technologies. But if you, you know, layer 2s, depending on layer 2, could already get there, and if not, pretty darn close. And then you add sharding into the equation, and then, you know, it just doubles whatever you got. How do we make sure we get cheaper transactions by using level 2 scaling solutions and not accidentally have high fees for transactions on other activities? So you have to be on the layer 2 itself. So there's a little bit of friction in this regard now. So basically, in order to use layer 2, you have to move onto that layer 2. There are a few ways to do this. Well, really one primary way right now, bridges. So you have to use a bridge to move funds from one environment to another. So you'll know if you're doing this because you have to go to like a website, an app that takes funds out of your wallet, moves it off of ETH base chain to you know, Optimism, for example. You might use the Optimism bridge. If you want to go to Arbitrum, you got to use the Arbitrum bridge. In the future, I highly expect centralized exchanges like Coinbase, Binance to support layer 2 withdrawals for Ethereum. So that's another way. Like if you're worried about bridges and you happen to trust a centralized exchange more, that's a way you could do it. Or maybe you're taking new money and you want to put it onto a layer 2, that's a way you could do it as a fiat on-ramp. But we're not there yet. All right, everybody, great questions. That's all I got for today. As always, that's subscribe to the channel if you haven't already. Smash that like button down below. That really helps these videos out so that more people can learn about blockchain. And if you're as fascinated with this technology as I am, you want to get your hands dirty, how can you get started today? Well, you can go to my YouTube homepage. You can find my free courses there. They're like Udemy courses, but they're totally free. And if you like those and you want to take the next step, or hey, maybe you want to take a master shortcut entirely, I can show you how to become a blockchain master step-by-step start to finish over at dappuniversity.com/bootcamp. You don't have to be an expert to get started today. I've helped people with zero coding experience become real-world blockchain developers in a matter of months. So that's all I got. And until next time, thanks for watching.